Hello and welcome to the Fat Tailed Thoughts podcast, episode 7. My name's Steve
Seven.
Atkins and I'm your co-host, and I'm joined as always by my dear friend Jared Clee. Hey Jared, welcome to the show.
Good morning. I don't think I would have bet on us making it this far, Stephen.
7 episodes, man. I mean, seriously, that's commitment, I think.
We're cracking away and we got more coming.
So this is part 2 of a 2-part series on the world's most interesting topic, paper in banking. Jared's still trying to convince me that this is an interesting topic. But seriously, if you want to check out episode 6, that was where we covered some of the key themes that we're going to double click on today. But Jared, if people are out of order or out of sync, let's just start with a brief recap of what we're talking about here, frame the subject up for the listeners, and really just, if, as I say, if they're out of sequence, let's get them orientated so they can listen to the rest of this episode and then go back and listen to episode 6.
And for those folks that are more interested in how the tech is used than how the tech works, perhaps. So what we're talking about is OCR technology, Stephen. So optical character recognition. So the world we live in is hopelessly analog. It's largely paper-based. So when you think about your bank statements and your credit card statements and all this stuff, there's a lot of data in there, but it's trapped on a piece of paper. And yet when we talk about a lot of the innovative stuff with fintech, financial technology companies, or even traditional banks, it's all digital machines. They're going to have underwriting machines. They're going to have risk models. They're going to have compliance that needs to review stuff here, who you are, and check if you're not a terrorist. We got to get there has to be a way to get the data off the piece of paper and digitized and into the machines. And that is the world of OCR technology, optical character recognition. And what we're going to dive into today is the digitization of that data is kind of step 1 in the journey, and it's necessary to power all that stuff. But turns out that that's a great place to be in the ecosystem for the startup, because you got access to all this really valuable data.
So let's go there first. Assume sort of 50, 100-year-old bank, reams of paper, legacy processes going back, mortgage application, loan origination forms, account origination forms. You can just imagine the amount of paper. You're the line of business owner for, let's pick mortgages, and you're looking to transform your business, transform those workflows, get more nimble. You're trying to fight and compete against fintechs in your space. Talk us through kind of some of that initial choices that people have got, because I think that's the way I read the newsletter, that there's some choices. If you're a paper-based model today, maybe you've got some apps on the web, maybe you've done some front-end system of engagement type stuff, but you're still fundamentally paper-based at the back end. Talk me through kind of some of those choices, and we'll use that as a framework to navigate through the conversation.
So it's you started in exactly the right place, that digital front end. So you can imagine someone who says, hey, I want kind of a traditional web presence, and somebody can upload documents and whatnot. The challenge with that, Stephen, is the documents you upload, the pictures, the basically PDFs and whatnot, all the data is still trapped on that stuff in that format. So historically, what they would have done is send it to, well, impolitely call a body shop, typically located offshore in a low-cost jurisdiction like India, and quite literally have rooms of people retype them in and quote-unquote digitize that data. OCR startups, you can plug into that process without really having to change too much about your kind of 100-year-old business process. And instead of having people retype the data, you send it off to the digitizing startup. They chunk through those paper documents with machines and digitize that data. Higher qualities of accuracy, faster turnaround times, the like. But also importantly, it sets you up to start taking advantage of a pure digital data stream, which is what we're going to hit on in a sec. Now, you do have alternatives as a bank. They just happen to be more expensive and more time consuming to switch out. One alternative is you could get rid of the paper, not quite all of it, but a lot of it, say digitize your forms, for instance. And you can have kind of a digital first mentality where, okay, we're not going to make you fill out paper forms. Rather, we're going to have you a digital one, or we'll get access to your bank statement fully digital by working with your bank, as opposed to you uploading the paper copy. That's one version. Another version is say, you know what, we think we're willing to redo the entire workflow to be a digital first from the get-go, in which case now we're talking about something quite large in scale. You're talking about changing the process, retraining the people, rebuilding the forms. It's a fundamental, that becomes a much, much larger engagement. We do have folks there, but the scale of that is quite large.
So let's put, as we pause the conversation out, let's look at that first option, the incremental option. I've got my existing processes. I think they're fit for my business. I'm just about okay. I don't have a massive budget to sort of completely heart and lung transplant the processes. Talk me through how I'd add value to that process and start to make some almost incremental steps forward and build some progress. Assume every bank's got a website and a mobile app now. I think we're well past that. So there's a digital front end system of engagement, but there's still paper based at the back end. Talk me through kind of how you'd see a roadmap for some of those sort of incremental steps forward.
So we can look at it both from that bank perspective and from the startup perspective who's selling in that OCR, that digitization service. And this is a really good example that the incentives here align quite nicely to go to the same place. Those OCR startups have a massive unfair advantage, which is because they're digitizing that data. They are, first off, they have unprecedented access to super valuable data. And I hit on this last week, Stephen. You can imagine a startup that say is helping you apply for a mortgage. They have access basically to your income and your wealth data. They've got a full, complete financial picture of you if they choose to do something with it. The second thing is because of where they are in the process, they're the first ones with access to that data. So in theory, they should have this massive advantage of being able to do stuff before anyone else gets a chance to.
And that's a point to double click on. So I'll interject there. I'm applying for a mortgage. I've filled in some forms. My bank's going to send them out to Jared's OCR startup. I think that's a conversation we're going to end up having at some point based on this. But seriously, you send them out to Jared's OCR company. They know they're probably the first person to see that I'm applying for a mortgage. Well, we all know there's hundreds of services you can tag around me wanting to apply for a mortgage. Is that the unfair advantage that you're talking about?
It's that plus the data access. They get both.
Mm-hmm.
What we'll talk about in a sec as well, they actually get a third advantage too, the access, the timing they get that access first in line. They also, because they're embedded in these fairly complex, deep in the weeds financial services processes, they've got unusual insights into the nuances of these, which allow them, so if they so choose, to start building services around that say, hey, I know I'm just doing like step 4 in the process, but I can actually help you with step 5 and I can help you with step 3. They've got the
Because they're
insight.
seeing both ends of the flows come through to them, the inflow and the outflow. They can start to move out and pick up the other parts of those flows.
Bigger piece of work for the startup, but very, very valuable.
So who are we talking about in this space? This is new to me. I'm not tracking the OCR space. You mentioned a couple of people like Blend and others in the newsletter. Just frame up some of this for our listeners and just give us a perspective of who are we talking about? Because this is a space that maybe not many people are tracking, and I'd not heard of Blend. I'd heard of Plaid, but I'd not heard of Blend. Maybe just sort of give us an overview just for a couple of seconds there on these types of companies.
So let's build our way up, and we'll effectively build our way up to Blend, Stephen. So let's start with a company like Oculus. Oculus, New York-based startup. Sam Bobley, the co-founder, and Vic Dua, the COO over there, have built an awesome company. They continue to expand the set of services that are available. they're a really good example, really innovative way of digitizing data that allowed them to do it faster at lower cost with higher degrees of accuracy than most OCR startups. I mean, there's a real secret sauce over there. What they've expanded into is what I would call basic analytics, and they're getting more and more sophisticated. But basic meaning I can look at, Stephen, your bank statement when it comes in, and I can look at the credits and debits, the inflow and outflow on a statement, and say, hey, if I add up the inflow and outflow and I compare the starting amount to the ending amount for the statement, do I get the right numbers? If I add up the credits and debits, I get a different number at the bottom. There's probably some funny stuff going on there that I should flag for whoever's reviewing. If I look at that over time, Stephen, I can start to look at your cash flows. I can start to estimate, even without a tax document, what is your income? What's your cash availability?
Credit rating, I would assume, spending habits.
Exactly.
Who my subscriptions are for streaming services, what car payments I'm making, what other payments I'm making. You're starting to build that complete holistic picture of spending habits, I would imagine, depending on which bank account, obviously, we've got access to and what statements we're talking about. But if it's your main checking account, they're going to form a pretty robust picture and holistic picture of what you and your spending habits.
Correct. And that's analytics that Oculus today now provides out of the box, and incrementally are deploying more and more and more of those that are super valuable for the bank rather than having to calculate themselves. They're just getting them as part of the service. Now, embedded.
So I'm going to pause there, but there's a data. So my relationships with HSBC, and I'm applying for a mortgage with HSBC, and I'm trusting HSBC. Do I know that my data's gone to this small New York-based startup and that they've got the complete now 360 view of my checking account? Talk me through that, because that's a thread that people are going to be starting to identify in their minds, and we should pull on it.
It is, and I want to separate two different concepts here, and we'll get into kind of version 2 of what Oculus has started to do, and it'll take us down the Plaid path as well, Stephen. So version 1 of this, everything we've talked about, Oculus is analyzing you for the purposes of providing greater insight to, if they're working with HSBC. In that model, even though they're doing the analysis, they're going to get typically disclosed as a sub-processor of HSBC who's delivering data back to HSBC for that HSBC effectively owns the rights to.
And is that on page 38 or 78 of the terms and conditions I signed up with for HSBC? I always forget which page it's on.
Exactly. That's exactly the right way of thinking about it. It's buried deep in the weeds. Now, where we can get a little more interesting is anonymize aggregated data. So rather than just analyzing Stephen, we can analyze people who kind of look like Stephen. Is your income, based on your income level, is your cash flows typical? Is the spending habits typical? That aggregated anonymized data, one easy place to start, easy being it's a high value, straightforward place to start, is basically a fraud network. Which again, Oculus has started down already. If I've seen Stephen at HSBC, and again, if your credits and debits didn't add up correctly, and I throw you on a bad guys list, if I see Stephen come in through Citibank now, I have the ability to go notify Citibank, hey, I've seen Stephen before, and we saw shenanigans over here. Watch out now that he's coming in over here. Now, there are legal and regulatory constraints here, but that is a really good example of an aggregated anonymized service that when they see Stephen come in, they can compare against the watch list and say, hey, we've seen that before.
So that's within the banking sector. But what's the situation if they want to sell my data to Amazon, to Facebook, to Google? Maybe it's one step anonymized, and they maybe don't know it's me, the person, but maybe they're getting, people in their 40s in Rhinebeck as the sample group. They're not getting specifically me, but they're getting it relatively targeted. Maybe it's not a cohort of one, but it's a cohort of a couple of thousands worth of data, which is, a micro segment that's small enough that's really interesting to the people who've got big data pipes trying to suck this stuff in to put adverts in front of me.
So typically, and I don't want to overstate, the folks that are doing the startups that are doing the digitization, the core OCR service, and then building insights on top of it. Oculus is doing awesome work there. Hyperscience is another New York-based startup that, as we'll talk about, started to expand into automating the business process around that. They typically are quite careful with the data rights. They're grown up in this case, both in the New York financial sector. They understand the sensitivity of the data that they're handling. Their client, the bank, understands the sensitivity of the data, and you end up with fairly tight data rights that ensure that it's basically being used for the purpose it's being disclosed. I'm going to contrast that with Plaid, who you brought up earlier. Who Plaid, if you're not familiar with, if when you sign up, when you use TurboTax, and they say, hey, do you want us to auto magically hook up your bank account so we can see what happened? When you sign up for a new brokerage firm, Robinhood or whatever, and you click that and say, would you like to hook up your bank account? Under the covers, that's Plaid. They're doing that work.
This is one of the benefits of being a HSBC customer in the US. Plaid don't support HSBC. So I have to go in and I'm normally really annoyed by the fact that I have to go in and put in my routing number on my checking account. I'm now starting to become less annoyed and actually seeing that as a value add for HSBC.
So Plaid, if you go, and again, it's page 9,000 of terms that nobody reads. If you go and read Plaid's terms, when you say, Stephen, you're signing up for Coinbase and you want to auto magically connect to your Chase account, Plaid, even though nobody bothers to click through and read it, Plaid, from a technical standpoint, has no reason to get access to your bank statements, etc., but claims that right when you hook up those two services. So rather than say the Apple model of iMessage, where they say, look, I'm going to let Jared and Stephen text one another, but I'm going to sit in the middle, encrypt that end to end, and have no visibility into what that data is. Plaid goes, oh, no. I'm going to stick my hand in the cookie jar and get access to that data. That is, first off, absurd, but it's the state of data rights in the US, especially, where, yeah, as an intermediary, they can claim that. And when you click the, yes, I'd like to hook up my bank account and use Plaid, you've just given them rights to all of your bank data.
And who are they selling that data to? Have they got the ability to sell that data? They've got the ability to put use your analogy, hand in the cookie jar, but are they? And what are they doing downstream?
So they say explicitly in their terms of service, as most startups do, that they, quote, do not sell the data. Now, let's be clear what rights they do own to that data. They are allowed to build any products they want on top of that data, meaning they can take your data, analyze it, etc. They can then use the fact that they know everything about you to sell you more product. They can also outsource the analysis of that data and the building of new products to anybody they want, any quote unquote sub-processor, which means that they may go and engage 3, 4, 5 contractors around the world who they hand over your data to so that Plaid can build itself a new product and sell it to you. Again, your data is bouncing all over the place. You don't know who has their hands on.
And I'm assuming they can build an aggregate data set and then sell that aggregate data set one step anonymized. So it's very, very close to being me,
Right.
but it's not actually me. They've basically stripped the name off the data and said, hey, we're going to tell you, as I say, about a micro segment of data that's useful. People who are Stephen's age with his particular background who live in his particular town and give you that as a microsegment, but they've stripped my name off it.
Correct. And I don't want to go down. It's probably a topic for another letter.
GDPR in the US, question mark?
Right. So if we start talking about PSD2, Payment Services Directive 2 in the UK, or we talk about the Open Banking Initiative across Europe, what we're talking about is not allowed. There are regulations on the book, and under GDPR, Global Data Privacy Regulation in Europe. What actually has to happen for that type of engagement, where they take it, they anonymize it once, you actually have to anonymize it twice, and they're quite careful. What you do is, as say Plaid, for instance, they would anonymize the data. They would send that anonymized data to a third party. That third party re-anonymizes the data or a second time and sends back that data set to Plaid. What that ensures is that Plaid doesn't have the ability to de-anonymize the data, and you've got a truly anonymized set.
Okay, so you talked a little bit about the unfair advantage that these startups get. Let's go back and double click on that for a moment, because I think that's fascinating. So these guys are building an interesting business, working with big banks, mortgage providers, credit unions to be that OCR provider. That's probably the most obvious side of their business. What's the flip side of what they can do with that data, and where's that competitive advantage? We've been kind of scratching at it from the negative side, but what's the positive side for those businesses?
The positive side is, so we've kind of got that vanilla use case of digitize and then provide analytics to the bank. But it's not just the bank that would want to consume even the anonymized aggregated versions. There are a whole series of startups, Stephen, we talked about on a previous letter, and we've actually had a bunch of stuff in the news recently on overdraft fees. There are companies like Hello Bridget, who's doing great work. You can sign up for a monthly fee, and if you are going to overdraft your account, they wire in money immediately so that you don't pay it, and then you pay back Bridget over time. If I, as the OCR startup, have insights into, hey, I've seen Stephen overdraft his account a bunch of times, you are a natural lead for a Hello Bridget. That's a valuable service. So now the OCR startup is not just selling to the bank. They can take those insights and say, partner with Bridget and say, hey, Stephen, I've analyzed you before. Maybe you'd be interested in Bridget's services. We could go a different direction. We could talk about someone like Smart Asset, who's built a wonderful platform. It's now, I think, 65 million visitors a month. And it's, quote, helping people make smarter financial decisions. So if you go on their website, which I have, you can go look at if my income level changes, or if my wealth situation changes, or if I move, what's the effect on my taxes? What type of, how much mortgage can I afford? How does that change based on interest rate? And then they move into kind of more traditional financial advisory work. Again, a really useful insight, aggregated, anonymized level. Stephen, if I was thinking about moving from New York City up to Rhinebeck, where you are, I would likely eat out less and cook more. Well, a useful comparison, if I'm considering about the impact on where I live, is for the average urban person, expenses on eating out versus for the average suburban person, expenses on grocery bills and the like. How is that going to affect my situation? That is an aggregated, anonymized insight that an OCR startup like an Oculus or whatnot could create, and then sell that insight, or even the engine to power that insight, to someone like Smart Asset. Again, entirely new revenue stream for the OCR startup, entirely new insight and valuable insight to someone like Smart Asset, who's helping people make smarter financial decisions.
And that's because the OCR companies are close to the signal and getting the raw data, because they're getting that first access to the printed form and to the copy of my bank statement, the copy of my mortgage application, the copy of my checking account origination. They're getting pure signal straight at the sources. Is that what you're saying?
It's correct. It's a massive unfair advantage. They get it, and they're first. And as long as the contracts are set up right, they own the rights to that aggregated, anonymized insight. And I do want to be careful here, Stephen. When you're selling as a startup, when you're selling into an existing customer, like you want to sell the bank more analytics, that's a cross-sell opportunity. You've done the heavy lifting of getting that banking relationship, building it up, getting through procurement and compliance and all the stuff you got to do. And now you're selling them another product. That other product is incremental revenue with fairly minimal cost, relatively speaking, to expand that. When we talk about that startup now selling insights to Hello Bridget or whatnot, that's going to be a new product, a new sales cycle, it's going to be significantly more of a heavy lift for that startup to build that new business process, to build that new product, rather, build that new revenue stream, sales process, etc. So massive opportunity, but it comes with real cost for the startup who's kind of effectively developing a whole new business than what they've done historically.
You've got to basically, there's two sides to your business. There's the sell to the banks and the people who want to consume the OCR. And then there's a data and analytics side of your business to sell downstream. So you've effectively got two sales teams with two different sales motions selling to different target customers. So it's almost twice the sales effort, twice the product management, because the product you sell to a credit union to do mortgage OCR work is very different to the work you do on the API and other side. So I can see that. I mean, this was a space I'd not pulled the thread on, and you, what are we now, 56 minutes ago, tried to convince me of listening time that this was an interesting space, and I'm already there now. So kudos to you for taking me on the mental journey down paper and OCR. But where do you see this going forward? We started the conversation with the I'm a line of business owner in a large established bank for mortgages. Kind of take us back to that frame of reference. Where do you see this going? We've got sort of 4 or 5 minutes left here, so let's maybe frame up the rest of the conversation in that context.
So you have an alternative, which is rather than deal with the paper, you could start to digitize more and more of the process itself. So the place to start, kind of the lower, slightly easier version, is engaging with companies like Anvil that are digitizing the forms. And I don't want to make this sound simple because it's wildly complex to do so. I go through an example in the letter of what that can look like. Something as simple as a form that has to be filled out by, say, husband, wife, or spouses with their financial advisor has a massively complex built-in workflow, which is, okay, I'm going to do this section, you're going to do that section. After we do it, we're going to route it to the financial advisor to do their section. They're going to come back. We need to review it. We need to sign it. There's a whole built-in workflow that has to have an engine behind it that Anvil has done a wonderful job building. Now, that said, as we get into more and more complex form type filling scenarios, say at a company and maybe 5 departments need to hit it, that workflow gets more and more and more complex. But for a bank that says wants to automate PPP loans or what have you, building out those engines, Anvil's done really good work, for instance, for financial advisors, helping them automate the onboarding of new customers. That's super valuable for a financial advisory firm who, at that point, when someone's super excited, wants to buy the advisory service, you want the lowest amount of friction possible to get that person in the door after they've said yes. Something like Anvil could be super valuable. Now, from there, we can go into more complex processes, like, say, a mortgage application, where really, Stephen, a standalone form or standalone form and workflows isn't going to cut it. Now we're talking about rethinking an entire business process. That's where true specialists like Blend come into the picture. They are not just building an out of the box, here's a process. That for the bank now becomes a multi-month effort, typically involving many millions of dollars with consulting firms as well, of, hey, we've got a toolkit where we can drag and drop process steps, and maybe we need to build a custom one because we do this differently than they do. And, oh, we don't need that form anymore because we can capture that digitally, etc. It starts with the availability of that toolkit to rebuild a process and the steps and the orders. But then it goes and now we need compliance to review it and make sure that we're still doing all the right checks. Then we need to replumb where the data goes because we're now collecting it digitally. We don't need those people that have been digitizing it. We can send the data directly to where it needs it. Well, the folks on the other end in the underwriting department probably aren't used to receiving data that quickly anymore. All right, we need to rethink the underwriting process because now we get data sooner than we thought we'd get it. We all of a sudden we've got a wholesale rethink of the process and a retraining of the people around it. That can make Blend and what they're doing super valuable, and long term it's a super sticky product, but it's a huge lift for the bank the first time they rethink this. So they really do need to be all in on that type of transformation.
And this is people, process, technology, change management. You're talking about, the mortgage department in these big banks could be thousands of people who've got to get retrained on new tools and relearn new ways to do work. And there's new connection points. There's new technology that's going to underpin it. Maybe the existing one sits on premises on a Unix application, and now they're going to be moving to the cloud. There's a whole security. I mean, you can just, I can see the technology lens of this, but you can just imagine the sort of people, process, change management perspective. And this is a process that could be supporting a multi-billion-dollar line of business within the bank. I mean, this is some of the changes that we're talking about here for the listeners, I think.
That, Stephen, exactly right. And it makes companies like Blend, kind of, for anyone thinking about building something like this, a double-edged sword, because while the value of having that end-to-end process fully digitized and alike is enormous, as the startup, once you have that, you're so deep in the enterprise, you've got a steady revenue stream and the ability to build more stuff on top to keep helping with other processes, to take on more of the process, what have you. Blend being a great example, they've got 167% net dollar retention. What that means, Stephen, is year over year, a customer is spending $100 with them last year is on average spending 167 this year. I mean, that's a wild way. They're growing the business 70% year over year just by getting the existing clients to use more of the services. That's wild.
And that's the easy, from 25 years in sales in this industry, upsell into an existing customer is the easiest. So every week.
But the flip side of that, Stephen, is look at the other side of their challenge. Blend is a $2 billion market cap public company. It's about 350 customers. So the heavy lift to get them on board, everything we just walked through, it's a lot of work to get them. Once you get them, it's phenomenally valuable for the company and for the startup. But for anyone thinking about building in this space, that you don't get to choose one or the other. You get this phenomenal opportunity, but it comes with a really heavy lift to actually execute it.
And barriers to entry. So we're at episode 7 of the podcast. We're failing spectacularly of our objective of making this a half-an-hour show for everybody to listen to. To wrap us up here, second part of our series on OCR and paper. If I can, Jared, get you to sort of take us home in sort of 30 seconds. What are the key themes from this episode and also episode 6?
So what I'd hit on here, Stephen, is we've talked about the journey from how OCR works to digitizing paper, to the opportunity, the insights you get from that, and all the businesses you can build on top, through to what if I just digitize everything? Well, the reality is, Stephen, we can't digitize everything, certainly not anytime soon. If we think especially about things like government forms, your license, your passport, the like, they are hopelessly stuck on paper. Never mind things like your tax returns and so on. So what we're likely to see over time is this kind of rising tide lifting all boats, where OCR startups are going to continue to have a wonderful opportunity to digitize the gazillions of pages of paper that are going to remain deeply embedded in these financial processes, concurrent with folks like Anvil on the forms and the workflows, and Blend on the entire process, digitizing more and more and more of that over time. Now, where will you see it go? Likely partnerships. There's always going to be a one-off form that Anvil is going to be phenomenal for automating. There's always going to be a piece of paper that gets uploaded during the mortgage process that's going to come in through Blend, but then it's going to get kicked off to Oculus or what have you. This is a rising tide where at each chunk of this process, there's phenomenal opportunities. And once you're embedded, again, you've got this unfair advantage of access to data. You're the first look at it. You can build more and more businesses on top of that.
I think that's a fantastic summary, and I'll use that to wrap up the show here. So you've been listening to the Fat Tailed Thoughts podcast. My name's Stephen Dickens. I'm your co-host. Every week, Jared and I unpick what's going on in the core fabric of money, fintech, and finance, and cryptocurrencies. If you like the show, click and subscribe. That really helps us out as we try and grow the listenership. As always, the complaints department is Cleebeard on Twitter. If you've got some negative comments, send them that way. I'm the good news department, so send everything that's good news to Stephen Dickens 3. All joking aside, click, subscribe, and listen to us going forward. We'll be back next week with the Fat Tailed Thoughts podcast. Thanks very much for listening.